something. Welcome to Subramani. Please subscribe, please click on the bell icon. I say this very rarely, but suddenly I am reminded that I need to say this also. Certain things that a equity investor should know, and these are axioms over long periods of time which one sees and one learns. One is market always does reversion to the mean, but please remember, when I say market does the reversion to the mean, people say, oh, if the share is bad it will come back. No, that's not true. An individual share need not revert to the mean. It can do very badly for very long periods of time. But market by itself, if the market is done badly for a long period of time, it will do well over some more time. So for me, this is something which I picked up from a big fund manager, is to say, if a market has not performed at all for the last say 10 years, it could be gold, it could be real estate, it could be US, could be any market not performed at all for 10 years, then it's a time to look at it and see what's happening. Or just put your toes in and say, okay, I don't understand what's happening, but thoda bahut to little bit of money I'm going to put into that, right? So then again, when there is excess in one direction, that will be reversed and there will be excess in the other direction. So if everybody loves banking, everybody buys banks, so bank PEs are ridiculously high. All banks put together as a PE more or one single bank has a market cap more than the Tata Group or Birla Group or something like that. You know there is excess happening in one business called the financial services. It's a great time to be partially reducing your stake in that business or in that whole financial services sector, which could be maybe getting rid of your mutual funds, getting rid of your mutual fund mean AMC companies, your banks, in any of those things, and then waiting with cash to buy something else or knowing what else to buy, right? You may be selling financial services and buying pharma, or selling pharma and buying some commodity business. You may be buying sugar or coal or oil or something like that. That's also possible. I don't think I have not seen any bull run or a bear run. It is always sectoral run. So the 2003 to 2007, the FMCG, the pharma, etc. did not participate. It was banking and infrastructure boom, though of course the index also went up. So some of these things you have to remember. There will always be excesses, and excesses will never be permanent, but excesses will always be there. You cannot forget it. You cannot say there should be no excesses. We will overpay, we will build excessive quantity in say pharma or in banking or in software. So when we see excesses, we know that excess is getting built, but we may not come out in good time. So when you see infrastructure excess getting built, or pharma excess getting built, or banking excess getting built, you should be acting on it, but we may not act on it. It could happen for a long period of time, and you say, oh, now I think the infrastructure, it is at a new high because so much of infrastructure, blah blah blah. We try to justify to ourselves, which may be wrong, but we tend to do it. And one very important thing is the excesses don't get cured by the market going sideways for 5 years. It doesn't happen that way. There will always be a fall. For example, when the pharma fell, even your good companies like Sun Pharma fell from 1200 to I think 700 or 800 or 700. When there is always a temptation, oh, it's at 1200, let me average at 1100, at 1000, at 900, at 800, at 700, and then you panic and say, oh my god, something is wrong. So when you see excess getting built up, it's very important that you forget things like averaging. You say, okay, now the fall is going to happen, and the fall does happen. So excess on both sides, or saying, oh my god, nothing is happening, this industry is just not moving, the EPS is there, the PE is not changing, the dividends are good, so what is wrong? Nothing is wrong. You need patience to build your position in those shares. You have a long-term vision that you want to build wealth, but you will always be scared of fear, and greed will always catch up with you. So you have to be careful about controlling your fear and greed, and that can happen only when you have written down philosophy statements or with a lot of experience, right? And also, it is not as though people will stop buying because you stopped buying, or because you sold. Somebody is buying, right? So at 1200, somebody must have bought Sun Pharma, right? Somebody must have bought it at 1100, 800. You may have bought it at 538 or 384, because March 2020 the share price did come down. So you have to look at what price you are now you're comfortable holding, at what price you will buy everything that's available in the market, and what price you will sell. All these numbers should be there in your head, and these numbers should keep changing on a quarterly basis. Markets are very good when it is broad. When there's a broad rally, you know there's a market rally. When a few shares go up, you know that one particular industry is going up. So you have to be careful to see whether it's a broad rally or whether it is specific to certain industries or certain businesses, right? Share markets come down in a very peculiar way, but largely after the whole bear market has come down, you will know what has happened. So bear markets will see, bull markets will see market at a high. Then one particular industry, like say pharma, people will feel something is wrong, there is excess, so we have to sell. So there will be an immediate drop. Right, so let's say the pharma index it is 1000, it will suddenly drop to 800, and that's the time when you feel, oh my god, this is temporary, let me buy. And there'll be many people like you who want to buy, and it will again go up to say 900. But then people will start reflecting and saying, oh, there are ESG issues in this company, there is this problem, there is that problem, and this is not going to sustain. So then it will come down slowly. And after that, when many people say, oh my god, this is below 800, which was the previous low, I should sell, then the technical sales will start happening. Then it will come down from 1000 to say 700, 650 or some 580 or something like that, and you will feel, oh my god, this industry is really finished. And that's the time when consolidation will start happening, and again it will go back to maybe 1200 from 1000, right? It's not a single share. I'm just talking of a pharma index going from 1000 to 580 to back to 1100 or 1200. If you have the patience to sit through the whole journey, you're doing well. But if you panic, you should panic very early. You should panic as soon as it falls from 1000 to 800. You did not watch it at 1000, that's fine, but at 800 you should sell, because you know that in the bear market there will be very slow selling also after some time. So the bear market will be very painful. The immediate drop from 1000 to 800 has happened, or 1000 to 900 has happened. After that, there will be a big painful slowdown which is going to happen, right, in that industry. So also one very important thing is, when all forecasters, everybody says now it's time for you to buy. 2024 Narendra Modi is going to get 400 seats, and then the market is going to see a one-way journey. We are going to beat China. The rupee will be 30 rupees to the dollar. When everybody is bullish and everybody is forecasting, you ask yourself one question: what if Narendra Modi doesn't come back in 2024? Is your portfolio ready for that? Are you ready for that? Do you have enough assets saying, okay, if the market does nothing, I'll still live off my dividends, or I will live off my debt portfolio? Right, that's a very important question to keep asking. Bull markets are fun, but it is in bear market buying that you actually make money. People forget this, because in the bull market, every day you open the prices, you open through it an app or something, and every day you see the prices going up, you think you did it, right? So you didn't. But it is in bear markets when you feel bad and nobody wants to buy, that when you buy you make money. Thank you.